Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the gold market. So the gold market, as other markets, have got significant hit on Friday and in general for the previous week, mostly because the very important driving factor that was seemed to be silent for some time, and markets really thought that it's not the time yet when it could turn to the active stage, has surprised everybody, and we could see it by the markets in general. So no other market priced in the possible rising of the interest rates, although interest rates in particular were rising from the August. So since the August they have increased more than 2 times, and just in the recent 3 sessions, the 10-year US Treasuries yield has increased for 25%. Actually, the rising of the interest rates in the current conditions are not something really unexpected. So we also talked about this, that somewhere in the second half of 2021 we expect that some pressure from the interest rates will appear, as it's just impossible to print a lot of money without the hazard of the inflation. And sooner rather than later, the inflation pressure should appear on the horizon, should rise on the horizon. But we thought that will be a bit later. Recent situation that we've gotten this week, it seems that we could get already the turning point on the market. Of course, this will not be straightforward action, as gold market has long-term bullish momentum, as the interest rates have long-term bearish momentum. And to fade this momentum, they need time. So that will be a time of the fluctuations, maybe some rest of the existed trend or something of that sort. But we could say that this factor already starts action. And it means that the major impact of this factor happens sooner than we thought. Additionally, and some kind of the more information on this subject, for example, in recent new non-farm payrolls release. At first glance, it seems curious that numbers were worse than expected, actually significantly worse, but dollar has risen. Why? Just because if you'll take a look at the on the hourly earnings data, you will see that have increased for 1%. With the drop of the employment, with the drop of the hours, working hours, you see rising in earnings. This is a clear indicator of the building inflation in the wage. So this is the major consumptions coming from the population, and the wages indicates the inflation. They have increased for 1%. It's approximately 20% in relation to the previous numbers that were about 4%. Now they 5%. That's really strong impact from the inflation and big hint on the possible rising in interest rates. That's why gold has been depressed. So coming to technical situation here in the short term, this is a very unique situation when the gold has completed all the conditions that we would like to get, but still this is not good time for taking the position. Why? Because of the manner how this has happened. When we're talking about the hand and shoulders, guys, we would like to see that in the second part of the pattern, bulls should control the situation, and it means that we do not like to see this type of action on the right arm. But that's the type of action that we've got. It's big plunge and sell off right to the bottom of 1838. Currently we stand at the support, and it's a 618 major 618 support and daily average sold. Also take a look here, stands yearly pivot point. So with this new reality that we have on the gold market, we can't get long just because market has hit the predefined level. So here next week our task will be to keep an eye on what will happen in this range of the 1807, 1838. whether the market will form any bullish pattern here. Only if we will get some clear bullish pattern, we could try to take the position. Even with this background, if even we will get this pattern, once it starts to work, we have to move stop to the break-even. Why? Because the problem stands significantly greater than we see only on the daily chart. If you take a look at the weekly chart, you will see that last week has become the reversal week, and market has formed bearish grabber here that suggests taking out of these lows. And they stand in direct contradiction to the monthly pattern. It means that one of these patterns should fail. That's why we should be extra careful when we're taking any long position here on the gold, because bearish grabber on the weekly chart could start action in any moment. That's why we have to get and we have to use as a background only patterns. They should stay on the chart before taking any position, and we should move our stops to the break-even as soon as possible. With any minor reaction for $10, $15 per contract, we have to move stops to the break-even. So that's what we intend to do in the gold market. Currently, it is not safe to take position blindly just because market stands in a strong support. If we would get the gradual action here, I would say let's go long, because we have gradual kind of the ABCD, maybe something of that sort. We stand at strong support. It is relatively safe to go long. Currently, with this sell-off on the back, it is unsafe. And that's why we need more confirmation from the market that it stands bullish. In particular speaking, if market indeed stands bullish, it should hold above the major 618 support, should hold above the oversold, and should hold above the yearly pivot point. That's a crucial moment. That's why this area is becoming very important currently on the new fundamental background that we have. On intraday charts, not too much to comment right now. So here you can see market stands at the major support, 1837, as we said right here. On daily chart it stands as well. And take a look on the hourly chart. Market has completed the XOP of our pattern, as we have considered. And actually, initially we thought it will be OP right here, but market has collapsed through the OP without any reaction. Right on Friday, by the way. So it just was direct downside action. Market hits XOP currently, but here, as you can see, we have no patterns yet. So for position taking, we still have to get some bullish reversal pattern around this area. So that's what we intend to keep an eye on in the beginning of the next week.